Hey, what's up guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. While you're at it, smash that like button for me. I really would appreciate it. Today's video, we're going to talk about Joe Biden's tax plan and how his tax plan may affect our money. So there's been a lot of talk on mainstream television, on YouTube, about Biden's tax plan is to increase taxes. One thing I want you guys to know based on my research is not really. Maybe on 1% of the population there may be a increase in tax, but for 99% of us, we may even see a reduction in our taxes. Now, I'm not going to go into every single line item in the proposed tax plan that Joe Biden is considering. What I will tell you is some of the main highlights. The first one is the personal income tax rate. So right now, your wealthiest people pay about 37% and some change as the top personal income tax rate. And under Biden's tax plan, that would go up to around 39% and some change. Again, for me, it doesn't matter because I'm not going to be making over $400,000 a year, which is who that top personal income tax bracket is going to be geared towards. Now, that doesn't mean my business won't make $400,000 in income, but it means I personally won't make $400,000, and that's important because the thing you got to understand with the personal income tax rate, it's based on wages, salaries. So, highly compensated individuals like doctors, lawyers, loan originators, real estate agents, people who make $400,000 a year or more as a salaried person or a 1099 person may be subject to that increase in taxes. But there's ways a highly compensated individual can reduce their tax liability as well. Find a way to create some write-offs. You can do that through investing in real estate, investing in a business, in a variety of ways. Talk with your CPA, and that person will be able to give you some ideas and some strategies to reduce your tax liability. The number one thing is, guys, is we want to make sure we pay our fair share. We don't want to evade taxes, but we certainly want to avoid and pay what our fair share is. Another one of the tax changes under Biden's plan is potentially increasing the corporate tax rate. Once again, 99% of us won't be affected by that. Because you got to understand the corporate tax rate that will be increasing is for C Corps, not for S Corps. And most of us are going to have an S Corp. So a C Corp is really for larger companies, and they have a corporate tax rate. For smaller companies, normally under 500 employees, they normally elect to be an S Corp. And an S Corp is taxed at the owner's personal tax rate. So at the end of the year in an S Corp, if you have $50,000 in profit, that $50,000, you don't pay taxes on it like a C Corp would. what you would do is that money would flow through to the owner's personal tax return, and then the owner would pay tax on that $50,000 of business profit at their personal tax rate. So if their personal tax rate is 25%, if it's 20%, if it's 27%, that's what they would pay taxes on. Now, again, guys, I'm not a CPA. I'm not trying to act like I'm a CPA. So anything that I say here, I want you guys to make sure you double check with your CPA, because I'm not a CPA. I'm just a guy who has a business. I've had my same CPA for the last 25 years, and he has steered me in the right direction. And I haven't had any problems with the IRS. I've paid my fair share of taxes, but of course, we've put strategies in place so that I didn't overpay. And that's what you should be doing. So there you go. Those are the two main ones. Personal tax return rate under Joe's plan is going to go up about 2% from 37 to 39, but it's only for people who are making over $400,000 a year. And I would tell you, if your business is making that type of money, you don't have to take all of that money out of your business as income. Take it out as a distribution. Then you won't be taxed at that 39% rate, right? And again, that's a strategy you need to talk with your CPA about, and they'll be able to fill you in on that. And then the other major change, once again, is at the corporate tax rate from 21%, where it currently is under President Trump's tax plan. But under Joe Biden's tax plan, it would go up to 28%. And again, most of us won't see that because we're not going to have a C Corp. We're going to have an S Corporation. And an S Corporation, like I said, the S Corporation's profits pass through to your personal tax return, and you're taxed at your personal income tax rate. Also, I just want to talk a little bit real quickly about LLCs. I get a lot of questions from guys about, hey, should I set up an LLC? How do I make money with an LLC? And really, an LLC can be advantageous if it's set up for the right reasons and you run your business through it. You know, LLC is short for limited liability company. And again, get with your CPA and make sure that's the proper business entity for you to set up for your business. Sometimes LLCs are not the right entity. More times than not, they are though. So you can have a single member LLC, or you can have a multiple member LLC. Single member LLC is for one single member. So for instance, in my company, RF Financial Consulting, I'm the sole member. So I have a single member LLC. If you have two or more members, then it's called a multiple member LLC. You have to figure out which one of those structures are right for you. Obviously, if it's just you, you'll be single member. If you got two or more, then y'all will be multiple members. There are some legal things associated with LLCs. Obviously, they limit the member's liability in case of a problem. Again, talk with your CPA. They can walk you through that. I'm not the expert in that arena. But since I get so many questions about that, and also the LLC is just an entity. It's just a business entity. You know, the way you make money is you make the money, and you flow it through your LLC to get all the benefits that an LLC provides its members, right? So the LLC itself don't make you any money. You make the money by having a great product or a service or some type of high income skill whereby you can generate income. And the reason you pass it through the LLC is so you can get, the benefits that an LLC provides a member or its members, as opposed to you just receiving all that income yourself, and potentially you pay more tax on that income than you need to. And you limit yourself from a liability standpoint. Again, limited liability company is exactly what an LLC is. It limits your liability as a member of that LLC, right? So that's one of the main reasons why you have the LLC, so you can have that protection personally against lawsuits and things of that nature. Drop me some comments, guys. Let me know what you think about Joe Biden's new tax plan. And let me know what you think about, LLCs. And how have you utilized an LLC to your advantage? If you're stopping by the channel for the first time, please consider subscribing to the channel. Share the video. Smash that like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. I'm going to keep enjoying this wonderful, beautiful day in Southwest Florida. And I'm going to catch you guys on the next video. Peace. In my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.